Joining us, market watcher Jeff Kleintop with Schwab. Jeff, welcome to the program. Good to see you.
Thanks for having me.
Okay, here's my premise. Wages are rising at a very fast clip. Consumer confidence at an 18-year high. The jobs picture very, very strong. I say we're set up for a very strong holiday quarter, which will reflect nicely on the economy and on the market. That's my premise. Shoot me down if you want to.
You know, markets care more about better or worse than good or bad. The economy is good. All those things you mentioned are good, but they're slowing. They're worsening. They're worsening from even better levels. GDP growth in the second quarter, for example, in the U.S., or better growth overseas last year. I'm afraid that while we may see a rally here in the remainder of the fourth quarter on a number of drags now dissipating, for example, maybe buybacks coming back to the market, or even the rise in the dollar pausing a little bit because that had been a drag on multinational corporations. But I'm afraid this rally may run into a peak in the global economic cycle next year. So unfortunately, it may be short-lived.
How about, let's deal with the midterms. There seems to be a trend in this very late stage of the election towards President Trump and towards the Republicans, certainly in Senate races. If the Republicans gained an increased majority in the Senate and maybe held on to the House, would that be good for the market?
I think the market is looking at the outcome of this election as very gridlocked, no matter what the outcome is. I mean, barring a sweeping move, one perhaps like you'd say a wave outcome for the GOP, which is unexpected, or a wave outcome for the Democrats, which is maybe a little bit more expected. The market's pointing to a status quo outcome, instead looking from a Washington perspective to see the Fed have more of an impact on markets ahead than lawmakers. For example, October 3rd, Chairman Powell came out and said, we've got a long way to go on raising interest rates. That's a direct quote. And so that, I think, triggered the sell-off in October. That's what markets are focused on out of Washington, more so than Congress.
Now, you are the chief global strategist, I think, if I'm not mistaken. So you took a world view here. Real fast, I think I'm right in saying that just about everywhere else in the world is really slowing down, and that we are a standout economy for our growth. Is that accurate?
That's true. There might be a few exceptions to that, but in general, the U.S. is a standout. My concern is some of that is on the strength of the tax cuts, which may begin to fade next year, and the U.S. may join the rest of the world in a slowing trajectory.
Jeff, thanks very much for being with us today. I know it's your first appearance. Probably won't be the last. You played your cards well, and we'll see you soon. Okay. Jeff,
thanks
thank
for
you very
having
much.
me on. Great to be with you.
Good stuff.